us why you think Wall Street has turned sour on your forecast.
Well, look, we just closed a quarter that finished much better than we expected. Our revenues were $900 million higher, and our net income was almost $900 million higher. So we saw really good demand for PCs. We saw very strong performance in our IoT business, and our DCG business, or data center business, kind of came in line with our expectations. So a very strong quarter. Part of it was a function, as we explained on our call, that some of the favorability was a result of pull-ins from the second half. But all that considered, it gave us the confidence to raise our full-year outlook by $500 million on the top line and 5 cents on the bottom line. So we feel very good headed into the second half of the year.
Definitely some analysts pointing out the potential for price and margin pressure, partially due to that pull forward of sales. What's your forecast for China? How severe was the slowdown?
Well, China's a big market for us. We've been operating in the country for over 30 years. We have important customer relationships. We have a global supply chain there, and we have a real strong employee base. So it's a big and important market for us. What we've seen over the last several quarters is really two things. One, overall demand has slowed as our customers there have digested fairly significant purchases last year. And then secondly, we saw a bit of an acceleration of demand heading into the second half in the second quarter because the fears of the potential of additional tariffs being imposed. So those combination of factors have China, which is an important market for us, being a little bit slower this year than we had anticipated at the beginning of the year.
Mr. Swan, good morning. Guy Johnson. Judging by the analyst notes that I've read, the concern seems to be that AMD is going to put your gross margin under pressure. What's your answer to that?
Well, first, as we have a great lineup of products as we go into the second half of the year. For our data center business, we launched a product that we called Cascade Lake, which performance-wise is a real differentiator in the market. And secondly, for our PC business, we just launched our 10th gen Intel Core processor that will have systems on the shelf in the holiday season. So we look at our lineup of products and we feel very good as we go through the second half of the year and in terms of 2020, as we're building the high performance products that our customers expect from us. And with that high performance, we've been able to get a premium price in the market. So we have a great lineup. We know we have real competitive dynamics, and that's the challenge you have when the market you're going after is extremely large. You have competition that enters the fray, and we feel good about our lineup of products and our relationships with our customers.
So you are saying with a high degree of certainty that you are not going to witness any gross margin erosion. You don't see that happening?
You know, what we indicated yesterday, Guy, is our gross margins for this year were roughly 60% in the first half and 60% in the second half. And those dynamics are a little higher in the third quarter and a little bit lower, our expectations, in the fourth quarter as we ramp our new 10 nanometer products. And that's consistent with how our business model works. When we launch a new technology process, in the early days, yields are relatively low, and that results in a degradation of gross margin. And as we ramp up those volume of products, the expectations are yields improve and margins get better. So it's very consistent with what we laid out at our Investor Day a couple weeks ago. And we will have a little degradation. And for us, that's a good thing, because that means we've migrated to the next technology node that allows us to deliver differentiated performance for our customers.
Huawei was about 8% of the server market last quarter, and that's a big customer for you, and it obviously takes a lot of your chips. How do you model going forward what happens with Huawei and whether restrictions from the US come off, allowing you to continue to ship, or get further imposed?
Well, during the course of the second quarter, initially when the entity list came out, we abruptly stopped our shipments to Huawei until we could get a better understanding on the implications of the entity list and the impact of export control on our business. After the interpretation, we concluded there was some cases that we could ship and some cases we could not. Our challenge is always serving our customers, but also abiding by the laws in the countries in which we operate. And we felt as we went through the course of the quarter, we were able to ship some product. Our second quarter strong results were modestly impacted by the entity list order. And as we go into the second half of the year, we've applied per commerce instructions applications for licenses to ship product that are of general purpose compute nature and should have no bearing on what the entity list is trying to accomplish. So that's kind of our expectation as we go into the second half of the year. Obviously,
yes,
we're going to watch the dynamics that happen in Washington, and we'll adjust and adapt accordingly. But we're going to continue to serve customers best we can and abide by the laws in the countries in which we operate.
Now, the just announced deal with Apple allows you to finally wind down your efforts in mobile. And now I'm curious, does your attention turn to NAND and getting out of NAND? You've denied in the past reports that that's happening, that you're in negotiations to get out of that business. Can you give us an update there?
Well, first and probably most importantly, the exit of the 5G smartphone modem allows us to double down on 5G and building out this convergence of networks, the convergence of compute and communications at the network, which is a big business for us. And our expectations in 5G is that will be a bigger and bigger portion of the makeup of the company's revenue. That's the most important. As you know, we've laid out 3 criteria that we think about when we make large bets that will evaluate those bets along the way. 1, it's a technology inflection that will have a real differentiated growth rate on the future of the industry. We believe both 5G network and memory meet that key threshold. Secondly, it's got to be a technology that allows us to play a bigger role in our customers' success. And memory meets that threshold as well. Third, we need to be able to generate attractive returns for our investors. And that's what we're working on. Memory is an important part of our business. It's a big part of our customers' bill of materials, if you will. And we have a real differentiated technology. The challenge for us is to continue to improve our execution to generate attractive returns for our investors. And that's what we've been focused on.
Intel's
Mr. Swan, can I just ask you one final quick question about data centers? You talk about that business being absolutely brutal. I think quarter-on-quarter revenue was down by 10%. You talk about the fact that it's not going to turn around in the second half. When is it going to turn around? Because that's a big chunk of business.
Yeah, it's a great question, Guy. First, to put it into context, the data center business last year grew by 21%. So what happens in this industry, particularly with the cloud service providers, is they make big purchases, and then they take time to digest the purchases. And that's the transition we're going through now. Last year was a record year of performance for us, and we indicated the first half of this year, our customers, particularly the cloud folks, would be in digestion mode. Our expectations in the near term, or in the second half of the year, is they'll begin to pick up demand for our chips in the second half of the year. On the more medium to long-term basis, we see the trends of demands for data and the compute storage capacity required are very attractive trends, and that's how we're investing to play a much bigger role in the cloud growth.